Hello and welcome to MF Corner. I'm Sonal Bhutra and with me as always is Vinnii Motiwala. We start the new Samvat and we have to talk about investments in mutual funds and how you can grow your wealth via mutual funds as well. So we do have two guests on the show today, but let's get started with the first one. We invest via SIPs, all lump sum, but the SIP number has just been hitting record highs.
Absolutely. Hi, Sonal. Good afternoon. And there's no stopping those flows, right? Every time we see in terms of SIP, the contribution inflows that are coming in, no sign of cooling off there. You know, look at SIP numbers in April. They were at 26,632 crores, 32 crore rupees. Now, obviously, that contribution has climbed up steadily. That number has moved up steadily. And then in September, it hit a fresh record high again, 29,361 crore rupees. Now, with flows consistently above record levels for half the year, the big question is now that are we finally nearing the peak? Is this the peak level? Will we start seeing a fall coming in? What are we expecting from investors now? What should we watch out for in this new Samvat? To talk to us about that, we have Kailash Kulkarni, CEO at HSBC Mutual Fund, joining us to talk to us about that. Kailash, good afternoon. Festive greetings to you and thank you so much for joining us on the show. Let's start by talking about this number that's come in, right? Do you think that what we're seeing coming in since, this whole year, is that going to be sustaining? Is that going to be continuing? Or, maybe we could see a change in this behavior of the retail investors.
Well, thanks for having me on the show and happy new Samvat to everyone. And let's hope it's very, very prosperous for all of us, especially those who participate directly in the markets or via mutual funds. And, there's a very simple question to answer very honestly, because we've seen a sustained growth in SIP numbers, and you just mentioned, 26,000 to 29,000 this year. If I just take you 1 year back, April of 2024, this number was 20,371. So actually, you're talking about 9,000 crores of growth in just about 18 months of time. That's phenomenal, and we see this to be a sustained mechanism on account of two reasons. One, we are seeing renewed interest in people believing in the power of SIPs. They know that, irrespective of what the market does, this is a great instrument to look at when you're starting your investing journey. And as more and more new investors come into the markets, we are seeing many of them use SIPs as a starting point. So I see this, fundamentally as something which will continue to grow. The other reason I feel, that there are enough and more investors today in the market who have a good track record of how SIPs have helped them. And the word of mouth generated through that is very, very powerful. So maybe, the near-term investor may not have a great experience, say 1 year back who started SIPs, but when they talk to people who have been invested for 10 years or so, I think it's a fantastic experience.
But do you think investor participation has deepened, or we are still seeing small ticket contributions coming in from new investors which are on a larger base but making those smaller contributions to the SIP? So what do you make of the clientele who is investing in the markets now?
So we're getting SIPs across both large cities and small cities. If you look at the assets under management, which is only the SIP assets under management, okay, it's roughly about a 65-35 mix, 65 from the largest cities and 35 from the smaller cities. But when we start looking at the number of new signups which are there, the last, you could say from April this year till now, it's roughly been about a 60-40, 60 in favor of the B30 cities, as earlier we used to call them, and only 40% of the number of SIP transactions, new SIP transactions getting registered are coming from the top 30 cities. So clearly, we can see that big difference which is there. Yes, the newer investor starts with a lower amount, but when we look at our own track record and when we look at our own data, we see that once the person has got comfortable with SIPs and having spent 3 to 4 years, they start upping the size of the SIP significantly. So either through a SIP top-up or actually by putting in more money in a new SIP. So that's how our trend has been, and I think the industry shows a similar trend. So clearly we are seeing both big cities, medium-sized cities, small cities, everybody contributing to the SIP, SIP bandwagon, as I can call it.
Right. Kailash, what about, while obviously when you're investing in, mutual funds, is not much about valuations, but there was a period of time when we saw a bit of a correction coming in the markets. There were a lot of investors who started worrying like, oh, should I stop my SIP? Should I continue? Or maybe what should I do over there? How should one actually start seeing this valuation story? It's not cheap, the Indian market, in terms of that. But also in terms of if there is, again, some bit of a further correction that we see, then what should one do?
Well, the good news is that the SIP retail investor typically nowadays, because the maturity levels have gone up so much, they go in for goal-based investment. So valuations is not at the front and center when they are going in through an investment through SIP. Maybe valuations are much more front and center when you are doing a one-time investment. So many of us SIP people are looking at a child's education, a child's marriage, their own retirement. That's something which is very, very important. And that, I think, is far more at the front and center when their investment decision is being taken, and not really where the P of the market is or how is it going to be in future. I think SIP as a product has become ingrained into people. They realize that you get more units if the markets fall and less units when the markets are up. So I think people are okay with that. In terms of valuations, while everybody talks of India being a costly market or a little costlier, I don't think that's the case. My personal opinion is that Indian markets are relatively good in terms of valuations. After all, you have to understand that the market is evolving. We are moving from a not so developed economy towards a developed economy. And any country which goes through this also gets re-rated in terms of valuations. So we are quite comfortable in a lot of places when it comes to valuation. There's enough opportunities to buy in various sectors that we find.
So, Kailash, a follow-up on that. You said that investors understand when the markets go down, NAV is lower, they'll get those units at a cheaper price. Then what explains the SIP stoppage ratio, which has been going higher? What's going on in an investor's mind, according to you?
So I think there are two kinds of investors. We have to understand that. The younger lot of investors, which is the, buy as you go type, through the fintech platforms, they may not be so long-term oriented. They may not necessarily be doing it for a goal, but they are doing it because it's a trend to do it. I think that is where we are seeing the maximum amount of stoppages as compared to the others. The more mature investors are people who are not really looking at stoppages. Second, there are reasons why stoppages are there. One, maybe somebody had signed up only for 3 years or 5 years and hence the SIP has matured, so there are stoppages. Second, there is a family emergency or there is money required for some other reason in the family, so there are stoppages. But I think broadly when we look at it, the more mature investors, more longer term investors, more seasoned investors, say those who are say 30 and above, are not stopping it as much as those who are younger than 30. So that's something they will learn over a period of time. They will gain experience that, oh, I made a mistake by stopping it. I was in a rush to profit book to buy a particular product. It could be various reasons, but it's not something one should really look at and be worried about.
Mm-hmm. Kailash, what about the fact that when you're looking at the number in terms of equity inflow, right, for the month of September, that's a bit of a decline while SIP continued to grow. So how should we analyze this point, in terms for SIP inflows and investments coming in there versus equity inflows?
So I think when we look at overall equity inflow, one of the trends which people start investing is they do look at 1 year past returns. That's an unfortunate thing that they should not be looking at past returns because past is not a corresponding thing to what will come in the future. And we've seen this over a number of years in the past. But if you look at our last 1 year returns, Indian markets have broadly been flat to a little negative. Barring the last few days of this month, October, I think it's been not a great year for the Indian equity market as compared to what it was last year. So clearly people do look at that and kind of slow down their returns. Second is they also look at certain alternate options, and gold was clearly one of them. So people did go in for a couple of gold related products in the last 1 year because the fund was, the price of gold was really doing very well. The third could be that they were moving a little bit into more safer products given the global geopolitical volatility is there. So we know a lot of clients, for example, who are saying, no, I'll wait for a little bit of certainty on the geopolitical front. Yes, I may lose out some returns, but I'm okay to park my money in cash and move forward from there. So we do see money gush in when there's a big correction of 1-2% in a day's time. But otherwise, people are waiting and watching for the geopolitical moment to settle.
Take that point, Kailash. Always a pleasure speaking with you. Thank you so much for joining us with your insights today on the markets, mutual fund investing, and a lot more. We'll take a quick break now. On the other side, we'll focus on how EPF and NPS compare with other retirement funds, that is the mutual funds, with Mimran Agrawal, who's the financial educator and director at FinSafe India.